Jerry Wattenberg is a financial analyst. He's founder of consulting company JTW International. He spent 15 years at Goldman Sachs, too. He knows this market well. He joins us live from London. What are we to make of this in terms of the international markets? How is the rest of the world seeing how Washington is trying to handle this?
Well, I think the entire market globally is really looking towards the U.S. right now to take the lead in solving the problem. The issue with the subprime started in the U.S. and it's emanating from the U.S. Into Europe and to Asia. And I think there's a significant amount of confidence that needs to be rebuilt, and it will start with the U.S. So the longer that Congress tries to work out the details and finalize the nickel and diming on this, I think the markets internationally will continue to get worried.
Well, all these markets are obviously linked. But some people look at the greed on Wall Street, they blame that. Other people look at what have been, the instruments that were used, the various derivatives, as people call them, and say, boy, this is really risky. Do some markets in Europe and elsewhere have similar problems that perhaps have not yet been uncovered?
I think the market in the U.S. was much greater in terms of its innovation, and also the market, especially the housing market, is much bigger in the U.S. than anywhere else, really in the core markets in Europe. And I think the products that were structured, the products that were created, although they're backed predominantly by assets in the U.S., they were sold globally. And globally from U.S. banks or from international banks to international investors around the world. So I know it's somewhat difficult to piece it all together, but certainly there's exposure to U.S. housing prices in Nevada, and people in, for example, Norway are certainly feeling it because maybe their state pension funds invested in those products as well. So I think Europe is slower in terms of its innovation, but certainly exposed to the U.S. problem right now.
How do they view it? What do they think is really responsible for it? When you talk to the people in the financial community in Europe, they look over at Wall Street. A lot of them work for these firms. A lot of them, in London at least, are concerned about, are they going to get another paycheck from Lehman Brothers and the like?
I think that's a great example. I mean, specifically the Lehman Brothers situation between the U.S. and the international operations. And you have to understand, when Lehman Brothers went bankrupt, it affected operations all over the world. They have offices from Tokyo to the Netherlands to Paris to London. So obviously that impact was felt. And I think the real issue that you're seeing right now is the concern about the stock markets going down. And as you highlighted in the prior piece, a simple trading loss in a bank in Asia can cause a run in Hong Kong. So heightened investor concerns around the world are clearly linked to what the U.S. does. And I think this week will be critical in terms of getting confidence restored. Warren Buffett notwithstanding, I think the global community wants the U.S. to come to a resolution sooner than later. And I think if we get through this week without a package, and over the weekend the newspapers, the TV shows start to analyze deeper, I think you're going to wake up on Monday morning in a situation that the U.S. doesn't want to be in.
I'm curious to know what the international investment community might think about the bailout plan itself. A lot of new questions being asked. The taxpayers in the U.S. themselves are saying, look, you bail these guys out now. What's that to stop? If you're going to rescue them every single time, what's going to keep them honest? What's going to keep them on the straight and narrow? Are there similar concerns overseas?
Well, I think you already saw, a large-scale, takeover, for example, a government liquidation here in the UK with Northern Rock. And I think the difference between the U.S. and Europe is that there are problems in the European banking system, but the government takes care of them. They force the banks to merge, and I think it's a lot of it taken care of a little bit under the table. I think in the U.S. right now, while I agree that there's concern amongst the taxpayer, when people start to look at the package and really get a sense of the actual economic loss that could incur, or gain perhaps, in case the mortgages pan out, I think that's a little bit more assailable in terms of it. But I don't think Europeans, tend to look at their governments for leadership, and I think that when they act decisively, they kind of fall in line. And I think the U.S. is going to have to provide global leadership to at least restore confidence in the U.S. banking system, and then it will emanate outwards.
Jerry Wattenberg, I want to thank you very much for being with us, giving us a little bit of that international perspective, how it's concerning people right around the globe as Washington tries to sort out its own mess. Thank you.